we start with a brief introduction of each other. Yen Lu, do you want to start?
Sure. Hello, everyone. I think we're kind of entering into the danger zone here. The stomach's beginning to take over, so
yes.
make it interesting. Anyway, okay, Yen Lu Chow here, Whole Tree Foundation. I've been kind of through the cycles. I started my first company in the 90s. I guess back then, the only VCs were government in Singapore. I think that was the very first VC fund out of Singapore by NSTB. I then became a venture capitalist myself, became an angel investor, started other companies, and been a co-founder of a incubator, a digital media incubator, and now more involved in the social side of things, nonprofits. Yeah, thank you.
Michael?
I'm Michael Yap. I know less about this whole concept of crowdfunding, so I'm not sure why I'm here, but I've been on the all sides of the camp. I used to run the IDA here. So I've been in government for a long time. So I've been investing. We invest about a dozen of startups a year right now. And many of them are in the shared crowdsourcing. I guess that's the only thing that I know about crowdsourcing or this whole concept. I hope to really learn from you guys.
Cool. Stephen?
Hi, good morning everyone, or afternoon. My name is Stephen Fang. I've been on both sides of the fence. I started out in the corporate world, but eventually became an entrepreneur, founded a series of companies, IPO'd a series of companies, and then eventually became an angel investor myself, and now I'm with Clearbridge, which is a VC/incubator sort. I've also been involved quite actively in the crowdfunding space, partnering up with the Singapore Stock Exchange. I also volunteer time for the government. I'm the chairman for ACE, which is a startup community movement that's just based across the road. So I've been very active from pure startup to early stage funding to mid stage funding.
Oh, great. And Leo, we've heard about you. Do you want to add a little bit more?
Yeah, so one personal fact that no one knows about me, I just lost my iPhone 6 Plus somewhere. So if you find an unattended iPhone 6 Plus, let's...
I saw one there.
Yes, please bring it over. Okay.
Cool, that's very good.
By the way, I just want to make a comment. I want to thank Leo, first of all, for this very, very educational presentation that I learned a lot. The other things that recently, one of my nonprofit, it's a nonprofit company for performing arts for young people. We did our crowdfunding on Crowdtoday, which is a StarHub operated crowdfunding platform, rewards-based, but it was powered by Crowdonomics. So I really want to thank him, and he's, of course, a pioneer in crowdfunding here in Singapore. Yeah.
Oh, good. I was thinking of asking Leo a question. That's, Fred Wilson, who a lot of people read about in the entrepreneur or the VC space, he said that venture capital could be swept away altogether by a flood of crowdfunding money. Now, is that true, or is it a bit exaggerated, or will they coexist or integrate? What's your view on that?
My belief that it's over-exaggerated. I think that as you look at the panel as well, there are extremely experienced investment professionals which have more of a role not to block the industry growth, but actually to enhance it, right? So, there is crowd wisdom in terms of, new technologies are being born every second, every day. It's hard to make investment decisions based on technologies or experience you had, close to a decade ago. Okay, someone really didn't like my opinion, but I'm going to go on with it anyway. That's where crowd diversity comes in, where people with different academic backgrounds, professional training can make investment decisions. But then being able to invest alongside, or being able to crowdfund and invest into a fund, which in turn is managed by a professional investor, I think is a great opportunity. And I think we start to see these trends with Syndicate Room in the UK. We see it with the angel list syndicates in the US. And it's also why we've made a carve-out in Malaysia as well, working with the regulators there, so that VC funds can also raise funds through crowdfunding platforms. So I think it's a collaborative relationship.
So not the blind following the blind. But Stephen, the VCs, you'd say they'd probably be more selective than the crowd. Would that be a fair comment?
Well, absolutely, especially if you look at the tech side of investment where you really require domain knowledge and expertise. So you see VC getting more and more selective and more specialized. But, you know, to me, crowdfunding is it's just a new word to something that's been in existence for a long time.
Yes.
The original crowdfunding platform is the church and religion.
Yep.
You know, they started crowdfunding 2,000 plus years ago.
Yeah.
The way we invest money hasn't changed that
Like
much.
share clubs, you could say as well, could you?
Exactly.
That's similar?
Exactly.
Fairly similar? So you're beginning to understand now, Michael? You're getting... it's
Are
just
you getting
like- it's
religious
ju-
now?
It's
I'm
just
even
like
more,
church.
I'm even more lost now, right?
But when you look at, say,
We're getting to religion now, eh?
Oh, you want to talk about religion now? You know, incubators and accelerators, you know, the area that you're in, when you see new companies come along, sometimes it's not, well, it's not all analytical, is it? Like some people say VCs are analytical, but they back the people a lot of the time. Must be the same for you when they come in, isn't it? What's that difference between making an emotional decision like a crowd may make and having an analytical one? You know, it's two sides, isn't it? And when people make decisions. And so, you know, thinking of the crowd and thinking of that, where would you position yourself in the decisions you make as a VC or as a selecting people into an incubator?
Well, I do think that the whole concept of crowdsourcing is here to stay. So the interesting thing will be where are the pockets where they will coexist. And one of the thing that bugs me a bit is really the great deals tend to go with the insiders. I mean, this is the nature of things, right?
Insider investors.
And also the very large deal. I mean, the situation now is that there are lots of capital chasing after deals. So actually one of the interesting issue will be really, do we really get the best deal for the public or the great deals are all gone by the time we get into the public domain?
Well, Facebook was a good example of that. You wonder when a company had 500 million customers and the only people that could invest were people that were clients of Goldman Sachs or something like that, you know. And so I think that was the thing. And then when it went live after the IPO, then they'd already pulled all their money out and things like that. And I think people are beginning to realise, as you say, it shouldn't be just insiders. Everybody should have a chance. Leo, what's your view on that?
Yeah, no, absolutely. And I think that you know, it shouldn't only be insiders. I think that it needs to transform from a gentleman's rich person's game. I mean, this hasn't changed for the last 100 years. It's like, you know, if you think about how Edison funded his project and so on, right? And I think that the whole issue here is that, you know, there's plenty of money, but it's not efficient, right? It's wrong for us to accept that it's good to spend 6 to 9 months and 80% of the time on fundraising, right? And I still need to do that because of laws and regulations which have been put into place for the last 100 years. I'd rather be able to use crowdfunding as a way to do efficient capital formation, doing it within 2 to 3 months, and being able to outreach to both, you know, accomplished venture capital funds as well as, you know, professional investors as well.
Have a number of participants. Ian Liu?
Yeah. I think Fred is just trying to make a point, right, to get some attention. But it's never one or the other. It's never 1 or 0. We know that. But anyway, you know, in this business, it's all about smart money, venture capitalists, isn't it?
Yep.
Then what happens when smart money meets the wisdom of the crowd? I think that's the question. And the wisdom and diversity of the crowd. Yeah, so I think we get some of the beginning of what that might look like with some of the ideas that were presented earlier in the past.
Yeah.
You know, the hybrid models, you know, investing as LPs in a VC fund so that professionals make the investment and they have the experience and knowledge, or investing alongside angels or super angels.
Exactly.
Those are very interesting models. But I think this is just the beginning. I think we're going to see this thing's going to evolve and grow organically, and I think it's going to end up looking very different from what we think it might be.
Yeah. I was having coffee with a guy the other day. He's in Los Angeles, and he got a text to say that he's just invested another 5,000. I said, "What did you invest in?" He said, "Well, Tim Ferriss, you know, 4-hour body. You probably follow that. Yeah. 4-hour body, 4-hour work week. He signed up on Angel List that every time Tim Ferriss invests in something, which is maybe once every 2 or 3 months, he invests 5,000 as well. And I think Tim Ferriss gets 20% of the exit for the money that he puts in. And it's exactly what you're saying, that there will be hybrid models where the crowd become involved in the actual deal flow. But what about, you travel quite a bit, Stephen, what about the international thing? Does it mean that VCs and deals and crowdfunding, it'll make a more international market?
Absolutely. I mean, to look at how we travel today, it's, I travel almost on a weekly basis, and I'm back for the weekend with my family. So why shouldn't investment and deal flow be that way? In fact, I would even dare venture to say that by next year, this whole space is going to go not just international, global. You will see deals flying around and investors looking at deals 24/7.
Leo, you'll know the Oculus story and that, but there have been a few of examples of reward crowdfunding raises that have been successful, and then the VCs have come in after they've seen it successful on a reward. Do you think that's a pattern that people could do a reward raise and then get their second round of funding? What's your view there?
Yeah, I think so. I think that, there's the basic conceptual model is where, if venture capital funds are on the fence, they would use reward crowdfunding as an early prediction market to see what potential market demand could be to inform their investment decision.
Like testing, trying, validation?
Yeah, but I think that, that's great for regions where there's great consumer products coming out. I think that in many cases in Southeast Asia, it might just leapfrog this trend where, people will look at market momentum and potential demand during the equity crowdfunding campaign itself, as opposed to having a reward crowdfunding as a precursor to test that before they make an investment decision.
Well, and for that, the door can swing both ways. It doesn't have to be, crowd VC. It could be VC crowd. There's really nothing stopping that from happening, so long as it is a good investment with good return. Yeah,
because the VC might exit through the crowd investing.
Yeah, we have a couple of startups running through that cycle now. Kickstarter and then former funding. And one thing that struck me, that the crowdfunding actually exposes the product immediately to the global marketplace.
Yes.
I mean, this has always been a challenging task for many of the folks coming out of the Asian market, right? How do you really get out there and build a product that really is more attuned to the global taste? And I think that's quite
and what
amazing.
Patent risks? Is there trademark risks, things like that, do you think? Or
just like the market is not very efficient at this point. Obviously, Kickstarter has a lot of hurdles for a lot of the folks coming out from Asia. But this is an interesting development because it's shortened the entire go-to-market. Man, this is amazing. I mean,
and Michael, the story that they tell the crowd and the one that they tell a VC, are they different stories? Do you think?
Strangely, I think it might actually be more similar than different. Yeah. Because you get to tell a compelling story, right? It forces you. In fact, I think, I've seen some of my startup doing it, and there's a marked increase in the sophistication of pitching.
Yes.
Yeah, I mean, suddenly they realize that this is a mass audience, and they need to reduce it to a point where you could reach out to people who really use the product, right?
But I saw on your wall last night, you had all these steps of market validation, feedback, retrying it, rebuilding it, testing it again. So if you look at it from a VC's point of view, where they're looking for the analytics and the proof and the things like that, you're doing that through your process now. Is it that like the lean start or something they call that, don't they?
It is. In fact, in our methodology, the Kickstarter is like what we deem it as for the product line and go to market, the second phase of it. Yeah. But it doesn't mean that you're successful in Kickstarter, you'll be a successful global company. But abject failure could be interesting to reflect why you're not making it, right? So there are all lessons to be learned. I think it's quite interesting for hardware-centric type product or consumer product.
Yen Lu, you've done a bit of work as in family offices as well in that area?
Yes.
And so can you see them actually getting involved in this whole area with the crowd and
I mean, just like any other institutional would.
Yes.
In that way. Yeah. And again, crowdfunding is a tool that you can use. Again, how do you? The question is, well, what we call the wisdom of the crowd? It's more than money, of course, right? Some people talk about social capital.
Yep.
How do you leverage that and other resources that the crowd might have besides just money? And the money from the crowd is mostly going to be, sorry to say that, but dumb money, right?
Yes.
Yeah. So the question, how do you?
Michael's going to
But
say
the other things, the diversity, other things that the crowd will bring. So the question is, how do you leverage that? It's a tool. It's not about this versus that.
No.
And I think everybody can, all the VCs and the people in the chain of investment chain can actually leverage on this. Yeah, I think that's the interesting part for me.
Yeah, exactly. Michael, did you have a
I was
view
just
there?
going to make a remark. We have been using the word wisdom of the crowd, right?
Yes.
But is it really true? We were earlier talking about people following other guys, and and so is that truly wisdom in the crowd when it comes to funding?
Well, on our site, we have the red squares or bars, and if they go live without any red squares on the platform, they seldom get more investment. But if there's already red squares there, meaning people have invested, people will look at it. And so social proof, it's just like if you're walking down the street, 4 people looking up, maybe you look up, but if there's 100 people looking up, then just about everybody looks up. Human beings follow successful patterns. And so, we had a raising where a family office actually invested $300,000 in the beginning, and people saw that and they want to know, well, why did they invest? They had a look, and these people, and so the investment followed that. And so, people follow patterns.
Yeah. So is that wisdom?
Well, yes, wisdom. Well, they have done experiments where the crowd are guessing the number of marbles.
So if you think about it, the equity market is actually a perfect example of a crowdfunding structure, right? And we learn enough that the equity markets are probably not the best place for extracting wisdom, right?
No, exactly.
I don't know.
Just curious about this point about
I think
wisdom. We say that a lot.
I think
and
the
that's interesting.
question
They
is...
can have panics.
Yeah,
They can be
I think the
panics.
question is, in this early stage venture investing, right? We know that 80, 90% of the startups will fail.
Yes.
Yeah, so what happens? Yeah, that's going to be the question. Yeah, people always talk about the success stories, the ones that have kind of gone through and that we see, but we don't hear about the failures. So what happens? And how would the crowd react? I mean, so that's waiting to be played out, I think. We don't know the answer, quite know the answer to that.
Exactly. But it would be fair to say...
Maybe Leo does, yeah.
But it would be fair to say, with like Michael was saying, through Lean Start and other things, people are lessening... If you go back a few years, somebody say we need a million or 500,000 to do this, but more and more they're having to prove things before they get the money. They prove they've got a customer, prove they've got a profitable customer, prove they've got an overseas customer, and I think the data in that will help that a lot more, won't it?
I guess it's my role to kind of like put a spanner into the works, but I'm no longer a big believer of this intellectual divide of capital, right? So if you have, I'm just going to say something contrarian, frankly, okay? We're all still friends. So if you have a professional investor who knows about that investment, knows exactly where it's going to go, and that it's a good deal, chances are he's looking at a commoditized investment, right?
What's that? What type of
A
investment?
commoditized investment, because he's seen it time and time and time again.
Okay,
he understands he's done it like these deals like this in the past. Right?
He's recognizing a pattern.
Yeah. So, on the other hand, so just to demystify the wisdom of the crowd, like I used to study at INSEAD, which is an MBA, right? So in a room, you sat down with 20 people. People would be from the banking industry, from the financial sector, consulting. Maybe we were a lot of consultants. I used to be a consultant too. But, people with real, practical experience where they could bring in, perspectives around, sales, marketing, due diligence, risk, compliance, and so on and so forth. And frankly, as an output of the diversity, we would get better outcomes in terms of discussions and also quality of outputs as well. And I think that, that's what we're really talking about in terms of wisdom of crowd. It's not really anonymous. It's really about bringing diversity, bringing in the professional academic trainings that people have to come up with a greater and more value-accretive outcome.
Mm. Yeah. Well, that's a good view, but let's wrap this up now, but we go from your side back again. But where does gut feel play in all of this? Sometimes you just get that gut feel that this is going to be something that's good. Do you think there's still a place for that?
For crowdfunding?
No, well, just in investment in general. Well, it is whether... You
What's
could say
the question?
wisdom
What's the
of
question? Make sure I
you could
can
say
ask.
wisdom of the crowd is sort of a gut feel in some ways.
Yes. No, again, it's about finding the right crowd for the right problem, so to speak, if you will. It's not about any crowd, isn't it? Yeah, it's about finding the right crowd, defining the right problem.
So each opportunity attracts its own crowd.
Absolutely. It's not.
Yeah, that's a really good point. Yeah. Michael?
Well, at least in investment, my part is really quite a multifaceted decision matrix, right? People, the environment, what do you think is your risk return profile at that particular moment? So I think it's a lot more complex. Obviously, that doesn't mean that we will not participate and look at all the crowdfunding platforms and look for great projects. But for us to make a decision, I think it's a lot more complicated than just, oh boy, there's 10,000 people following that projects and we should all invest in it. I think it's a lot more complicated.
Exactly. Stephen?
Well, I tend to lean with Leo here. I think if you use the 2/3, 1/3 rule, you always invest in a portfolio. You don't invest in one sector. You don't invest in one type of industry. 2/3, you want to follow, fairly commoditized deal, fairly standard, which means not really using your gut, but using actual analytics and understanding their accounts and looking at where they're going. And then you have the outliers, which is the other 1/3, which could be, huge flips.
Yeah.
And for the outliers, you got to use gut because they are doing things that, frankly, the market doesn't even know it needs it.
No, exactly. Leo?
Yeah, I think that really two things, just to wrap it up. I think it's extremely important to get this right from a macro point of view. There's so much dependencies on SMEs and also on startups. The top 1% will always be covered by professional venture capital funds. But most of the economy, employment, number of enterprises, GDP is contributed by the non-1%. And this doesn't mean that there's bad deals. It just means that they're not going to give a 10x return to venture capital.
Yeah, they're not ready for VC.
Yeah. On the other hand, if you look at investors, everyone who's here who's not the top 1% is going to be the new lower middle class in about 10 years' time. Yeah. That doesn't mean you should all go out and put money into venture capital investments. God bless if you do. But you should be allowed to have alternative investments like venture capital as part of your portfolio to be able to create wealth. And I think that's what it's all about.
Balanced.
Yeah.
Just as a response to Leo, right? I mean, the VCs community is not going to sit still, right? And then the whole issue is that the VCs are evolving as well. Yes. So whole strategy that we used to do portfolio evolving into all-in, for example, you're going to see that happening in some of the big VCs. So I think as the crowdfunding platforms and ecology evolve, the VC themselves will become a different creature.
Yes, exactly.
Okay, just replying to the question about whether there's any wisdom in the crowd. Basically, in investment crowdfunding for, let's say, small companies right now, there might be some form of information inefficiency that might have hindered people from actually making the right choice. So right now, it's been restricted to only, let's say, the top 5%. So what's there to say that if, let's say, we democratize the entire economy, giving people the access to all these projects, and they themselves become educated, and in the long run, learn more about this industry, and hence being more educated. But by blindly saying that there's no wisdom in the crowd, seems that we're not giving them a chance.
Can I take one for you, Leo?
Can I? I'm happy to take this one.
You can.
I'm happy to
Thanks,
take this
Leo.
one. Yeah, no, it's a process, no question. And then we bring us back to 1980s. Everybody knows about the Grameen Bank. Do you remember that?
Yep.
Grameen Bank. The reason I brought it up because when Babu was talking about the next billion and empowering women and all that. Okay, first of all, Grameen Bank was started in the 80s by Professor Muhammad Yunus.
Like a Kiva type thing,
and they were lending, $10, $20 to the poorest of the poor, and guess what? 97% of the money were lent to women. Do you know this?
Yeah.
Yeah, and the return rate. Okay, there are a few interesting things about this. The return rate of the debt, the money was 98%. Yeah, what can you that kind of return? Any, right? That's amazing. And the other thing you should know is that it was a cooperative. It is a cooperative, meaning that the crowd is funding the crowd. The people that were borrowing money, put money back, become lenders. Yeah, and of course, Professor Yunus won a Nobel Prize for this. And now microfinance is a big thing, and it becomes sort of a shark lending now because such high interest rate. But the initial idea was to get the poorest poor out of poverty, and they got millions of people out of poverty, mostly women, entrepreneurs.
And the questioner also highlighted the educational aspect, that people had to learn about that new way of getting money, of using it, returning it, as an educational opportunity as well. Was there another question there somewhere?
My name is Klaus Nem. So my question is around the people element. In non-crowdfunding environments, it mattered that you had a well-balanced co-founder team, and VCs would bring directors that would bring talent to the team. Is crowdfunding only about money, or will it also be able to crowdsource sort of co-founders, directors, and so forth?
Yeah, well, that's an interesting one. Were you thinking of answering that again, or What we find is, when I went story team followers in my presentation, the team, if you get one guy coming in there and he's just sort of a bit of a nerd and he's got a great idea, people won't invest because they don't believe if they give him the $100,000, he'll be able to implement. And so I think that naturally around any opportunity, I'm sure in your process, you gather together a team of people that are going to actualize that opportunity. So have you got an answer for that, Stephen or Michael?
Kind of. Short answer is yes. But it depends on the type and the type of platform of crowdfunding that operates, whether you're in early stage or mid stage. If I think back to my nonprofit ACE organization, there are companies that's constantly looking for partners and professionals and directors, and they are crowdsourcing in the sense every time they pitch or they sell the story, it's to a group of people.
Yep.
But for, say, mid-late stage equity crowdfunding, that might not be the case. It's not efficient for them to be finding these directors. The companies would have come already fully packaged or somewhat packaged, ready to go and grow. So short answer is yes, but depending on which stage they are at.
Yep, good point.
I want to ask you, there's crowdfunding, but you mentioned, doesn't it become sort of the herd mentality? And how much of that actually comes out, it sort of breeds itself? So how do we avoid this herd mentality?
Well, that's what the regulators are worried about. But as you saw in the example I showed with Neil Young, there was 16,000 that invested in the reward thing because they got the product, and only 100 invested in the equity raise. Hope is tough to invest in. As I was saying, 1 in 10 might be successful or whatever. So people subconsciously, even if there's a lot of people, it's hard to get that momentum. And if they do pump it up, you breach securities regulations. You can't say, well, invest in this opportunity and you'll get a bar of gold for Christmas, because the security regulators will shut you down, because it's open, transparent, it's published, you say what your opportunity is. So as long as the platform is making sure that what you're saying is not hyping it too much, it'll be difficult to get that hype whereby, the herd mentality will take over and thousands of people will get ripped off. What do you think, Leo?
Yeah, so again, let's kind of like decompose what the herd is. The herd is basically a mass number of people who make blind investment choices, right? So if you address the latter, right, that's why it's up to crowdfunding platform operators to make sure that people acknowledge and understand the risks and also the investment opportunity as well. So those happen in terms of filtering and membership, and also when we curate the content as well, to make sure that, Paul talked about the 3 or 4 lenses he looks at. And that's how we'll make sure that there is, authentic and real representation of the business. So that's how we address the latter part. The first part, the crowd, I don't see an issue with this, frankly, right? Because a mass amount of people means that, you're no longer, blowing a deal on 1 or 2 investment opportunities. I've done angel investing before. I wasn't quite a good investor, but the risk was that I blew, my wife's not here, right? But I blew off quite a large amount of money. Whereas, if I'm able to have participate in an investment opportunity alongside many other investors, that means my ticket size comes down as well. So I can actually invest in many things and do a portfolio play. I was listening to someone from 500 Startups the other day, and their math is that you need to be able to invest into 50 different deals to be able to neutralize risk and statistically generate returns. So that's kind of like my view on, herd mentality and so on. You educate, you filter. But, having a large amount of people is not necessarily bad if you look at a portfolio and risk diversification point of view.
Maybe you don't invest in individual projects. Maybe you invest in mutual funds.
Yeah.
Like the index, what Leo maybe was referring to, So mutual funds that could diversify your portfolio. But, yeah.
But that's going to be another set of risks that I guess in the evolution we will see. And we see this quite a bit in the financial market. The operator themselves update in the marketplace, and they themselves are the cause of many of the crises that's happening, right? I mean, we just saw one in the recent time in financial crisis. So I think this evolution will actually happen as well. And one of the most dangerous thing I think will happen, and we will see it, are people who inadvertently participate in the whole process of the herd. They created the herd.
Maybe I just sum up all the answers to say that as a species, we cannot function not as a herd. That's how we survived for millions of years. to be successful, you just have to understand how to use that. And, having a diversified portfolio works in your favor towards that.
Very good.
I was just thinking that, human beings before the currency started working around to replace the commodities and so it used to be a barter system.
Yep.
Do you think there might be a chance that we are heading towards currency-less economy and barter system because of crowdsourcing possibility where we replace everything with what I have and you don't have, what you have, I don't have? Will there be imaginative possibility?
And we talk about herd. I remember like 2 years ago we did a summit in Berlin, and one VC said to me, "We're gonna see big scam out of this crowdfunding." Yeah. And I listened to him and I said, "Okay, so is that your point?" And I said, "Yeah." And then I said, "Could it be bigger than a Madoff scam?"
Yeah, Bernie Madoff, Ponzi scheme.
Yes.
And it cannot be.
Yeah.
And the reason why it cannot be is because it is based. The foundation is the transparency.
Yes.
And if you're transparent with 10 people, it's different than you're transparent with thousands of people.
The issue is transparency is amazing, right? Bitcoins, you can't get any more transparent than that, technically.
No.
But yeah, human
see,
ingenuity has amazing ability to. There will be up and down, and I think we have to take it as part of the growing process.
But this Bernie Madoff is a good example because it was all it was regulated at. But they're printing the statements on their own printing press, and they're doing everything inside the house, keeping the books in there and everything like that. When you get to crowdfunding, it's out on the platform. Other people are validating it. Their employees, their relations, everybody is sort of getting an insight into it. So I think the transparency is the thing that'll carry it through.
Exactly. And I think this is the 2 main signals that when people do crowdfunding or anything crowdsourcing related, they send 2 clear messages. One is I'm transparent, and 2 is I'm opening for you to participate, build a product with me from day one.
Well, thank you very much, panel. It was really good, and thank you very much for your questions.
I just added that the peer-to-peer, which is like very important, that's the technology that will enable that.
Oh, did you want to have a go?
But it's already happening, right? The peer-to-peer stuff. It's happening at a very big scale, all in different parts of the economy.
In some sense, it's the share economy, right?
Share, digital, physical, everything. And Airbnb. I mean, all these is happening in a big way already.
Yeah, exactly.
eBay, Craigslist. I mean.
Yesterday we mentioned about the reputation. Of course, Juan, he didn't want to call like a currency. Reputation, trust, right? But what this can do when this is enabled across hundreds or even thousands of platforms.
Exactly.
But that's important for another reason. In terms of what you call it, reusing what we have already, because there's a lot of waste in this world. Yeah, and we're dumping I don't know how many megatons of stuff, like it's just electronics every year, right? So I think there's definitely. From a planet survival point of view, there's a real need for something like this, isn't it?
Even Carl Melbrain from yesterday's presentation said we're wasting 66% of the electricity.
Yes, absolutely. Yeah, there's so much waste already. Yeah, exactly. So in that way, to reuse a lot of our resources that already own, right? That's very important.
Great.
All right. Thanks very much.
Thank you all.